Welcome to the NISM Masterclass. I am your host Sashi Krishnan. Our purpose at NISM is capacity creation for the securities market ecosystem, and as part of this purpose we sit down with the gurus of the securities market to learn and understand from their journey. I'm sure we will benefit greatly from the conversation that we're going to have today. And my guest for today is Anand Rengarajan. And Anand is the Managing Director, Head of Sales, Trust and Security Services, Asia, Pacific, Middle East and Africa at Deutsche Bank. And Anand has over 25 years of experience with Deutsche Bank and is an accomplished custodian banker, if I may put it that way, and an expert in security services. Namaskaram and welcome to the masterclass session, Anand.
Thank you, sir, and privileged to be here and do my bit to contribute to the industry.
Yeah, and thank you so much for being here. I know you have a busy schedule and have flown down from Singapore, and you took out time from your busy schedule to be with us. So the assets under custody with custodians in India today has crossed 295 lakh crores. It's become very, very large. And there are a number of critical services that custodians offer their clients. So I just wanted to go through some of these services to get a better sense as to what is happening and what are the new emerging trends in these services. So safekeeping is one of your key services. And in today's market, unfortunately or fortunately, there are no physical securities. I mean, all securities are dematerialized. So what processes and safeguards does a custodian put in place to ensure, one, that an accurate record of the holdings and ownership is maintained, especially when everything is dematerialized, and two, in ensuring that the legal title integrity in street name arrangements, etc., is sort of ensured. If you could quickly take us through that.
I think to answer this question, it would be better if I kind of define what we do as a custodian.
Right.
Firstly, we do a fiduciary role in terms of servicing the needs of the investor fraternity, Institutional Investor Fraternity, and underneath the Institutional Investor Fraternity is a large retail base. So from a regulatory standpoint, investor protection is the key. And in your endeavor to provide investor protection, you also need checks and balances which are done independently by a neutral third party in the capital market ecosystem, who looks at providing that comfort that these assets are invested where it is to be done and provide a larger fiduciary realm, which is what we normally call as safekeeping of assets. And that is a very important aspect, because as a retail investor, when somebody says, I am making the following investments, you are absolutely sure that investments are being made, because you know that settlement of what you buy and sell happens through a custodian who's got an independent fiduciary role. And there are lots of other things. Now, therefore, even in a dematerialized world, the role of what you do as providing an independent way of providing these checks and balances is very important. Now, of course, compared to the physical era, in the digital world, it's a little different, that I don't have to worry about having walls. I mean, if you recollect in the good old days, and there were a lot of institutions that were known for walls and automation of walls, where you had to move physical paper, stock. The process of transfer used to be quite cumbersome because it was manual. Now, all of that has obviously become efficient.
Right.
But that doesn't mean that the relevance of the safekeeping role that you do has become lesser.
Right.
In fact, on the contrary, it has become even more, given that people also find innovative ways to game the system. You got to be even more innovative at that.
Right.
So that is the one primary role. But the second role which a custodian would provide is not just support and safekeep the assets of the investment managers,
Right.
but the other services that are required, which may not necessarily be the core competence of the investment manager, but that is where we could then add and create value.
Right.
Example, somebody is investing in stocks,
Right.
The clearing and settlement of the actual purchase and selling of stock, of course, we do in our responsibility, but thereafter, the services that you provide when you are holding a stock, be it dividend processing, be it a rights issue that happens subsequently, or a stock split that happens subsequently, all these gamut of services which typically we call as asset services, some cases it's called corporate actions, that asset services is the role we play, which is also the reason why in different parts of the world, custodians are also referred to as asset service providers.
So yeah, I will come to asset servicing. I have a lot of questions on asset servicing. But coming back to safekeeping, the kind of risks that are now associated with safekeeping, especially in a digital world, are now very different from, the kind of threats that we had when everything was physical. Because previously it was vault theft, now it is cyber threats, right? So how do custodians manage that risk? I know that the regulator, SEBI, has, a large number of requirements around, cybersecurity measures, business continuity, disaster recovery. But what are the, key checks and controls that you put in place to ensure that these threats are sort of mitigated?
Multiple. So, I mean, the risks in this, like any other industry, is pretty common. You have operations risk, technology risk,
right.
Regulatory risk of compliance. But if your question is very specific to the technology aspects of the risk,
yeah, especially relating to safekeeping of these assets,
then the good thing is most of these assets are not held in the books of the custodian. Right. It's held in the depository, right. and therefore there is always replication of data available, so that provides a natural resiliency to it. But notwithstanding that, while the other players have their own ways of managing resiliency and risk associated with it, we as a custodian have a role to play here, and that is through a combination of making sure that you have the right setup to address cybersecurity risk, you have the right set of setup to address continuity planning. There are defined, and fortunately here regulations are very well articulated and defined in terms of what is expected. And there is no shortcut or no circumventing that. You have to adhere to it, and even to the extent that if you are in certain seismic zones, you will have to make sure that your resiliency caters to addressing those seismic issues that can happen, because catastrophics are always unpredictable and can come in multiple forms and shapes. So you have to take care of all the force majeure situations to ensure that data is still intact. And technology is so advanced, there are multiple options to make sure you're there, right? And increasingly in the last 3-4 years, the word risk and resiliency is common in every client discussion.
Correct.
Of course, it is linked to other risks which are emanating these days, but largely if you look at technology risk, cyber risk is a very big thing these days, right? And it's a topic we'll probably, I'm sure it's in your list of questions in later. But in a world where we are moving into digital assets and custody, if you lose your keys, then you're as good as having lost your assets.
Correct. Exactly.
Right. So therefore, it is even more important that you have a very robust technology infrastructure, and you have the right data center providers to cater to that.
So are custodians today using, or integrating blockchain and distributed ledgers, etc., to enhance security?
Not for the conventional one. But as you move into digital assets completely, which is probably not yet available in this part of the world, but in some parts it's already there, and we have quite a few players in that space. Yeah. It is definitely very relevant.
Slowly we will move towards that, is what. Yes. So you said that transaction processing, you were mentioning a little while earlier, is a key service that custodians provide. Including trade settlement, reconciliation, real-time reporting, all that. So today in India, the daily settlement, at least in cash equities, is crossed over 1 lakh crores, right? And you're growing 10% to 12% every year. So what are the challenges that custodians would face to ensure that, with this growing volume, you have error-free transactions? Again, is it, technology-driven? Do you use AI for this? Because this is going to be a very intense process, I suspect, as volumes keep increasing.
Absolutely, absolutely. And this is also largely led by the surge in retail investor population getting into financial assets. Right. And this is a common trend. I mean, you've noticed this in India, but if you look at certain other emerging market economies, I mean, Indonesia and some of these other ASEAN countries, they're largely led by a huge proliferation of retail investors base entering this. financial assets industry. So that is going to drive volumes.
Right.
And the second angle, which I've often mentioned, is the platform service providers who are now entering the space massively to cater to this specific growing retail investor segment.
Right.
Now, a combination of that means volumes are really growing at a rapid pace. Value of the transaction could be lower, but volumes are higher, which therefore means you need to have a very technologically enabled, efficient, scalable system.
Right.
Otherwise, it's not sustainable.
Correct.
Despite all that, people are endeavoring in that space, there are still manual touch points, right? Which is why we are all working towards making sure that we move towards automation and remove those manual touch points, which is largely there, and make sure that then you have scalability. And it should be such that if I have to grow from the few lakh crores that you mentioned to, let's say, 5x times that, which is realistically possible in a matter of years,
Right.
we should have a scalable model, and we should not be throwing people into this more because of the risk factor, right? And here you leverage lots of new technological tools to make it happen. AI is probably one of them,
Right.
but there's a combination of things that we have to do to make sure that the key point is, if you look at one capital market chain, I mean, whether it's equity or a fixed income, or within fixed income there are vertical time, there are multiple touch points.
Okay.
Those are the touch points where there are vulnerability, and you just need to make sure it is automated. But there
Is
again,
it vulnerability or is it friction? Does it slow down the process, or
no, it's just that it's a break. I mean, it's not one simple process where I've done. So there is another person in between. Then there's a
Okay.
concept of another data coming in from another intermediary which needs to be verified. So there are multiple players in the chain, and there are multiple. So if you draw a chart of how a corporate bond transaction flows in any country,
Right.
you will find it could occupy the entire wall to draw up a full flow.
Correct.
While simply you may just say 2-3 things, but if you draw the detailed one, it occupies that flow. That therefore means it's not straightforward, it's quite complex.
Correct.
But then there are ways in doing it, which is why you have to look at standardization. Our clients sometimes can be intermediaries. There are clients of them. So that is where the starting happens, the origination of the transaction happens. Then it goes to this, and they will have different systems. Then it will come to us, we will have different systems. Then it goes to the clearing houses, it goes to the depositors, they have different systems.
Right.
But they are all talking and working on the same transaction, but different systems.
Right.
That is where you need to have interoperability of systems in a manner, but interoperability is the wrong word here, but more compatibility of systems,
Right.
and making sure that you are still making sure that the single golden source of the transaction retains its essence, but at the same time you are just letting it flow through after doing what you need to do in your respective role. Now, that sometimes can be challenging, and that is where you endeavor to one simple way of doing things, a standardized way of doing things, and there are lots of things, right? Like Swift is one step further. Everybody uses Swift on the chain.
Right.
It's fairly straightforward.
Yeah.
But not all countries and everybody would use that. So therefore, you will then lead to a little bit of differences, which is where the point I make. You need to make sure that you enable it. Otherwise, that could be an open area for vulnerability in breaking that. So therefore, lots of it is evolved. This industry is not like started recently, right? It's evolved over a period of time. There is massive amount of technological advancements that are already at play. But because it keeps changing, we are always looking at the next new thing to help us.
So these platform service providers you were talking about a few minutes back, they are now integrated into this entire chain?
Yes, yes.
Okay.
So they have direct connectivity to somebody else who then deal with somebody like us and then move through.
Okay.
And we all have systems which are capable of, like tomorrow if my settlement volumes quadruple,
Right.
like in the next 3 months, of course we are definitely get up for it.
Right.
But if it goes 200 times in 3 months, I don't think anybody would be prepared for that. But if they give us reasonable time, we would definitely be able to do that. So we are all ready for.
Yes, so as much
Mammoth
as
growth.
volumes have sort of spiked and are only going to grow 10-12%, settlement cycles have also compressed, right? So we moved from T+2 to T+1. We are now looking at moving to T+0. I mean, it's not far, or I can see a day where you actually have instantaneous settlements. So what are the processes and technologies and upgrades that you need to tackle this shorter settlement cycles?
I mean, definitely there is linked to a shortening of the settlement cycle, and we obviously experienced this with the T+1 migration.
Right.
The entire process cycle of an underlying equities transaction is changed.
Right.
Your cutoff times get changed, your trade cycle instruction timelines get changed.
Right.
And then if you had a slightly longer window to do certain things, you now have a shorter window, which means whatever you were doing internally now needs to be shortened. So there could be bespoke systems that you were using that also needs to change. It's not like just your core settlement platform could change, because all of us, in our respective institutions have multiple other systems that work in tandem with that.
Correct.
So that means then linked to the new process flow for your T+1 settlement, you have to make all the associated tech changes to work. Even though you may say I've got an extremely parameterized system, so I can simply go and say, okay, 2, change it to 1 and it's done. It's not as simple. You've got to do some changes to it, and in some cases you may have to do a slight change to your codes, and then it has to be tested, and then the industry's testing, you participate in the industry. So it's a long run process, definitely involves extreme amount of planning as an industry first, and this is where I think we have shown to the world, I think, how T+1 has done, and then there are so many countries that have followed. Most recent was US, and now Europe is next, and of course they have a longer window, because that's exactly the point I'm making. In usually countries you need like 1 to 2 years minimum to plan, first as an industry, then internally you go and plan yourself within your organization, and then once you are ready, then you go through the testing phase and stuff like that. So there is work not just in the technology side, the operational nature of what you do also changes. So if you are used to doing it in a certain way and within a certain time frame, it won't work. Now you have got to do it faster, you got lesser time. So your operations mindset, the people's mindset also needs to change. It's not just a simple system change and I'm done with it, right? And it starts with the investor. Now the investor, if he was giving me trades in a particular time, now his timelines also change. So the fund managers need to change, their systems need to change.
Right.
So it involves a lot of these changes, and there is definitely resources, tech and otherwise involved. But to your other point on what exactly is driving it, of course the benefits of crunching. Every time you shorten something, there is always a benefit. In this particular case, probably the benefit of increased liquidity for fund managers, which is what drove regulators to do this change.
But what about systemic risk? Because from your vantage point, wouldn't systemic risks have been reduced dramatically because you have shorter settlement cycles?
Yes, but I think if you had a technology which is catering care of that, I think it's better. But has it drastically reduced? I would think it was, because we had
already sort of controlled
correct, yeah,
the system even at T+2.
Correct. Otherwise,
but liquidity has been has been enhanced dramatically because of shorter settlement cycle.
Yes. Because otherwise it presupposes that the earlier one was fraught with too much of risk, system risk, which was not the case.
Okay.
I mean, how many instances of failure have we heard in the past when it was T+2?
Right.
None, right? So that's why I wouldn't say that it is drastically reduced and there was a big risk before, but definitely it's a step which reduces the risk, but as long as you manage it, it is always well managed.
You still haven't answered my question. As we move from T+1 to instantaneous settlements, what happens then?
So that part, I think there's still a little bit of a debate on whether that's possible, what are the benefits of it, because beyond a point, crunching the timelines from an institutional standpoint is not so straightforward. Definitely feasible, but it's not so straightforward.
Right.
And we have to really look at the benefits of it.
Yeah.
And that's why I said from an institutional standpoint, because retail standpoint is obviously a little different.
Right.
And that could probably happen. But this one.
So I'm just tempted to ask, has anybody else in the world attempted to move to T+0 an instance?
On the equity side, no.
On the equity side, nobody else. But we are clearly definitely trying to go there. And we could be a sort of leader in that entire process if we get it right.
Correct.
So I just also wanted to, ask you about, the interoperability, because, interoperability has now come into play in the Indian markets. And has that made post-trade servicing, better? Has it reduced compliance complexities? administrative overheads that you as custodians have?
Yes, definitely. I mean, is it quantifiable? Probably difficult, but it's a very commonsensical thing as well, right? I mean, you are dealing with two, then you now have to worry about just one way of looking at it. So that obviously releases a bit of the workload that you would have otherwise been done, etc. So there is a natural benefit of interoperability that comes with it, which I think is at play. And I think it helps, not from our perspective, it helps the other players in the industry much more better than I think custodians as well. So you should look at it from the larger sense. It was inevitable that I think it had to be done, and I think we've set a trend to make it work, and it's now completely BAU now. I mean, it's working.
So you were talking about asset servicing, and you were saying that custodians take care of these corporate actions, dividends, stock splits, etc. Now my question, Anand, to you was that the complexity of a lot of these corporate actions has now been increasing. You've got mergers, demergers, different ways of sort of giving shareholder benefits. So can you just explain what are these complexities that have crept into the system, and how do custodians deal with it?
I think that's the expertise that we bring with it, right? And that's one of the reasons why I mentioned specifically asset services over and above the safekeeping aspect. Because if you look at it from an investor standpoint, it will be hard for anybody to expect the investor to have expertise in all these things. And that is where we have central expertise to done. And most of the custodians define your differentiating point as how well you service asset services because of the expertise and experience that you have within the team, which is usually people who are been in the industry for long. They understand this very well, and therefore they have a good understanding of each of these events. It's usually we define it as an event, right? And like I said, a stock split is an event, and there are I can't recollect now, but in excess of 70-80 events typically in any country, which you have to have prepared. But the occurrence of probably all of them on a regular basis is very low. Usually the 8 or 10 events are the ones which keep happening every year. The rest happen once in a while because some M&A transactions don't happen often. So each of these you need to have somebody who understands how and help your clients understand. Because one of the points I didn't make earlier, the nature of what we do, and from a regulatory standpoint, we are not supposed to be involved in anything pre-trade. That is the prerogative of certain other players. So we are not into advising what to invest in, all the stuff. So as a service provider, it is important then that I'm very familiar with all these aspects of it, and not advise clients, but explain to clients what this means if required. So that eventually the decision making of what needs to be done is the clients. Making sure that it is within the boundaries of what the regulators permit, within the boundaries of what we are supposed to do, and make sure that the execution happens is our role. So the decision is theirs, execution is what we support.
So, I mean, other than these events, there are some services that you offer on a continuous basis, like fund accounting services, like proxy voting services, like tax reclaim processing. So, could you just sort of give us a sense of some of these services also? Because I think they are very, very important, especially given the fact that they are not core to, say, what an investment manager would be doing, for example, fund accounting. And therefore, unless he has a service provider like you who can support that, it becomes that much more difficult for him to concentrate on his core activities.
This actually a very interesting question, because custody is what we do as a core. But then over a period of time, you want to differentiate yourself because it's a competitive world. There are multiple custodians. So there came a point many years ago, probably during my initial formative years, I think, came a point when people said, custody, clearing and settlement, everybody can do. What more can I differentiate myself to say I do this better? To some extent, corporate actions, you can say I got better understanding, whatever. But then, say, can I look for horizontal integration where I can look at other products which lend easily into the custody one, but I can add value and I can showcase that. So that actually thought was the genesis of why somebody said, you know what, we should look at fund accounting. For an asset manager, it's an important part. It's not his core, and actually, in some parts of the world, the fund accounting role is a separate licensed regulatory role. Because regulators want that also to be done independently, because you don't want to sometimes calculate your NAVs yourself. So it is not.
Valuation, I do understand, needs to be an independent role. I mean, security level valuation. But does fund accounting also?
In some countries, it is not all countries. So in a few countries, it is separate. In fact, there is a separate licensing also for that in some countries. But coming back to your question on other services, so that horizontal integration led to this, and now lending is a very important thing in most markets, right? And regulators want to have active lending set up in the markets because it helps in liquidity, etc., etc. So when you're the custodian of assets, and if somebody has a long only view of a certain asset and that is easily lendable, logically you will then facilitate that by saying, you know what, you decide on lending and all the other particulars, then I will make sure that I'm executing the trade and taking care of what needs to be done after I've lent the stocks, because you're only lending it, right? After the period, you have to get it back and then integrate it back into your regular holdings, etc., is what we do. So you see, all these ancillary activities are lending itself to what the core is done. So fund accounting, and then performance
advisory.
So proxy voting is
proxy voting, not advisory so much, but you only sort of help out in the voting part.
So proxy voting is very, like I mentioned, they will make the decisions, we will help them execute it. But in the conventional way, how would you do it? Let's say there's an AGM happening and somebody will tell you that of the following 4 agenda points, I want you to respond on my behalf in the way I want. And that is a bit manual, and then you have to have a physical person going, and it could be any parts of India, all that stuff. Now the industry needed a way to efficiently do this without manual intervention and somebody physically going and doing all these things, and I think that was something that had to happen, because as the industry grew wider and more AGMs and stuff like that, otherwise I would have had to have a 20-member army just to go and do all these things in various places, right? So that is now a trend where in all markets you get into this proxy voting services, and there are established specialist providers to do other ancillary services for voting. So this small thing which you think is fairly simple, there's a small mini industry working on complete solutioning around this area.
So what about ESG services? Because I think you at Deutsche Bank do an extensive sort of extensive work on ESG servicing also across the world, and I presume in India also.
Largely, as a bank, we are definitely, because Europe is one region where they have taken quite a bit of lead on these kind of things, and Asia, of course, lots of work in the ESG space here, and we have a couple of years ago opened a center of competence in Singapore. But coming back specifically ESG and what we do in the fund space. At this juncture, predominantly in most countries in Asia, where there are funds which are called ESG funds, which is there.
We have in India also.
So India as well. Right. India as well. The services that are being provided are still traditional.
Right.
Because other than the fact that it's an ESG fund, the services is very straightforward. I just make sure clearing and settlement and all this set of services we do. But what the industry wants and what we are working towards is the enhancement and value addition which you are referring to, where I will provide ESG related services. Now, one of the services that is being explored is very often a ESG fund has a prospectus which defines the parameters on which it'll make its investment, E or S or with different types categories, and then the investment will do that. And the companies they would be investing in would have a prospectus which would say, I am doing the following things and these are the reasons why I am a ESG compliant company and all the stuff.
So that there are certain ESG metrics which you would track and ensure that they match.
Exactly. So once these metrics are there, how are they tracking to these metrics? Like your quarterly statement, they also release a ESG quarterly report, sometimes it's semi-annual. So this tracking and measurement is typically called as impact measurement. That's the parlance in the ESG world. So impact measurement and related services is one area where you could do. So for that, it's very simple. Today we get ISIN with the related attributes of the trade. you get the same ISIN with ESG attributes as well, then I can completely automate it. Right now, there are some data providers working towards that ESG data. Globally, there are a few, and I'm not sure about the India one, but there are people who provide ESG data. So, as a custodian, you anyway get market data from market data providers. So, you add this ESG data, make sure it's integrated, and then you can provide the whole gamut of analytics around the investments that they made in these companies. But the most demanding one is about impact measurement, like I mentioned, but you can do lots of other things in terms of analytics. Once you have data, it's up to you to decide how you can create value and give it to your customers.
You know, talking about analytics, I mean, I do remember that I used to get a lot of analytical reports from the custodian in terms of what are the type of trades, what are the kind of dividends that, you know, got paid out in the last year, what are the kind of interest, you know, inflows that came. So some of them were, you know, predictive, some of them were prescriptive. So you do a lot of work around that analytics also nowadays.
Yes, yes, that's the value addition that each one of you can bring into the table. Because the processing is, everybody will do it. I mean, if you're a custodian and you can't settle trades, then you might as well not be one, right? So that is the straightforward part. The value enrichment comes in, amongst other things, from a reporting standpoint, all the analytics that we could do. Now, if you're doing performance attribution, you could do you know, performance analytics and you know, performance reporting. Those are all value added, and it consumes a reasonable amount of expertise, which
so this performance attribution you do as part of your fund accounting services?
As part of the fund accounting services.
Right, okay. And I think that will give investors a big insight into how their portfolios, etc., perform, are sort of behaving. I wanted to come to, you know, cross-border servicing, because I think that's a very important part of what a lot of custodians in India do. And, you know, out of that 295 lakh, you know, crores of assets under custody, almost 125 lakh crores is, you know, money that's come in through foreign portfolio investors and foreign direct investments. And therefore, cross-border servicing becomes very, very important. But, I mean, this is obviously a lot more complicated than the services that you provide to a domestic you know, investor or a domestic institution, right? And also you play a quasi-regulatory role out here, because you are a DDP or a designated depository participation. So could you just take us through this quasi-regulatory role that you play and the kind of services that you need to provide for cross-border servicing?
I'll start with the first part of your question, which is the role we play as a DDP. It's interesting, it's not very common. Of the nature that we do in India. There are probably some other countries we have a similar setup, but in countries where in the custody parlance we call it ID market. There are usually omnibus markets where you can have
ID
you need to have individual accounts at the end investor level. You can't have it aggregated at the omnibus level, right? So usually you talk about omnibus markets or segregated markets. So that's the other term, segregated. So India is a market where you need to have segregated accounts. So that is one. So when you have that, each of the investors who would like to invest into India obviously need to apply for what is called as the FPI license. That role was earlier done by SEBI as the regulator, and
the regulator was directly
doing it, and then therefore they decided it may be better off where we define the policy and the framework, and we get the custodians to do this. And because it's a little different from the role of a custodian, it was called designated depository participant. So where our role is simply making sure that as per the policy framework stipulated by SEBI, we are able to qualify and assess the various foreign investors who would not come in. And once we deem that they are fulfilling the policy guidelines as stipulated by SEBI, we grant them the FPI license on behalf of SEBI.
Out here, is it only SEBI or are other regulations from other regulators that need to be fulfilled?
No, it's only SEBI largely.
So there are no RBI or other.
This is, I think the FPI is a SEBI framework policy. And that is an important role, but actually it makes sense in a way, because we are not therefore compromising on the regulatory framework that is required to be adhered to.
So who takes responsibility for, say, the KYC? The custodian then?
Custodians always.
Responsible for that?
The KYC is a little different, but yeah, similar process, but the KYC is always the responsibility of the respective financial institution that is playing the role.
Okay.
Of course, there is a commonality between what you would do as an FPI application form vis-a-vis the KYC, which is why there is a lot of efficiency that is built in. We have now one common application form, concepts, etc. But it is simply put, making sure that the policy framework is not being compromised, but you have a very decentralized way of doing it, so that there is naturally better efficiency in the system. So that is one part of what we do now in India. But the role that we play, to your second question on the global custody framework, it is twofold, right? One is for those clients who are coming inbound into India, and we are also increasingly seeing a lot more outbound as well. Though limited, it is there. And from the Indian context, from a global context, in some countries there is no limit or whatever. The outbound is quite significant. But when you're talking about anybody who is coming inbound, their requirement, because these are investors, institutional investors sitting 20,000 miles away, 10,000 miles away, and but they have an interest in India because of the attractiveness of what India offers to them. They are looking for a partner who understands how the regulatory framework works, what would qualify, etc., and they would look for somebody who, on their behalf, is able to manage and safekeep their assets in India, and make sure that they are abiding by the Indian regulations, not just on the investment framework, but there is a taxation angle, etc. We may not provide direct tax services, but in conjunction with tax advisory services which are provided by other firms, we make sure that their investments are safe, done in line with the regulations, and that. And there is always an added embedded FX component in these transactions, and therefore they obviously look for somebody who will help them with their FX needs as well. So market entry, which is the term used for facilitating their entry in the market. So in India's case, it's a combination of the role you play as a DDP, helping them get in their API and making sure they are set up, because the tax part, everything set up and ready for trading, and then thereafter provide the gamut of services. That combination of market entry, custody, and all other ancillary services which you may require will be the critical element of anybody who is an international investor coming into your country. The reverse flow, the wide flow, or if you are looking at a lot of investors in the US or Canada or elsewhere, where they typically invest in multiple countries. Like if you have got an emerging market MSCI tracking fund, it will obviously invest in all the emerging market countries based on the allocation of the MSCI index. Then you need services in all these countries. Right. So at the core will be
you have to have a common service provider?
No, not necessarily. There's no requirement.
There's no requirement.
At the origination location where the fund is domiciled, and let's take it as an example, US, you will need the services of a global custodian who is equipped to not only provide the services of the home jurisdiction, but they have this setup with custodians like ourselves in various markets where they would be able to provide services in the rest of the world. So if this is a fund which is investing in, let's say, 28 countries in the world, you will have arrangements in all the 28 countries, and you will have a system which talks and interfaces with providers that have been set up in these countries. So if there is an investment which is on a daily basis, they are not going to trade every 28 countries, but today it will be 4 here, 5 there, all of that. It's a very specialized industry. They have mastered this in the way this is done, and it's quite common. But the reverse is also now starting to happen in Asia and including in India, although at a much slower scale, smaller scale, where they are going outbound investments. Like from ASEAN countries, India, there are outbound into markets like US or Brazil or so therefore you have to, if you need to cater to this segment, you need to be global in nature, where you got services, or you can tie up. You can tie up with providers in these banks and have the interfaces built, and you can provide that service. But that is increasingly now a very important driver, because people are trying to diversify risk and investments.
Yeah, so with these cross-border flows, I think not taxation, regulatory compliance, safekeeping, there are a whole gamut of services that need to be provided across multiple countries. right? And unless somebody has an understanding of that, you're saying it becomes very difficult to provide these services. So beyond tradition, just to take a step back and moving away from these cross-border services that you provide, beyond traditional securities, custody services now are getting extended to alternate investments, to private markets, private equity, private debt, private credit, REITs, InvITs, real estate, commodities, a whole. In fact, I think Deutsche is a commodity custodian also in India, if I'm not mistaken. So how do you tailor make custody solutions for these kind of assets?
I mean, the concept is very similar. The underlying, as a custodian, you would always want to be a custodian who is asset class agnostic.
Correct.
I mean, I can't say, to a fund manager, if you do only equities, I can support you, but if you do a fund account, fixed income, I can't do. You can't do that, right? I mean, if you want to be in this space, might as well be in this space, right? Whenever you have a new asset class emerging, and that is important, you will have to find ways of servicing that.
Right.
I mean, many years ago when we pioneered and started doing, gold custody, people were wondering how are we going to do it, because in India, as you know, the regulations stipulate that you have got to mandate, you got to hold physical custody, not paper form of gold. So physical custody of gold is a different setup.
Right.
But you then get a bunch of people together, you get some experts, you look at it from a risk standpoint multiple times and provide a framework that goes through a few rounds of tests with various providers, and then you tick the box and say, okay, now I'm ready to offer it. And then industry also evolves. It is not like starting, for many years we were wondering there were very limited assets in gold custody.
Exactly.
But of late it has gone to a different level now, that's a different thing. But we have done it for 15 years now, we are very mature in the way it is done. So your next point on private credit, which is the big in thing, if you go abroad everywhere, this is the most often discussed topic.
It's also happening in India because a lot of people are now looking at private credit to finance.
So it needs a slightly different way of looking at it. But the good thing is private credit, in some parts of the world may be new.
Right.
It's not new. I mean, globally in certain parts it's been very mature.
Right.
And therefore we have players who have been well entrenched and experienced in dealing with that. Even fund services that you do typically on the back of those kind of investments are completely different.
Right.
It's not the same. So just because you may say I'm familiar with fund accounting doesn't mean you will do it. That is slightly different. Even the systems, everything that are used are different. So that we will leverage and bring that expertise, which is what the industry has always done, right? You always have players who are a little bit familiar, and then you get that. So we have done every time a new asset class has come. You do this. In this case, it's not entirely new. It's already been done in other parts. You just replicate it, adapt it to your Indian regulatory framework where required, and then start doing it. The core part of servicing, like reporting, reconciliation, all that is we are going to reuse the same.
But what about the covenants in private credit, for example? So you would monitor that also, in terms of whether they have maintained their DSCRs and things like that. Does that also form part of what you would be monitoring as custodian?
Not in all cases. It depends on what we market by market. There will be some changes. Combination of what we have done and what we need to do from a regulatory standpoint, or what the industry wants. So I'm not sure there's one answer to that question, but yeah.
Yeah. So I had a last question, Anand. So the world's changed, and we are seeing the rise of digital assets, and now custodians across the world, I mean, may not be so much in India, but now they offer digital custody services. And these would include, for example, cryptocurrency custody solutions, and you would be employing advanced security tools like I read about multi-sig wallets, and keeping digital assets and tokens in cold storage. And there's a lot of literature around this. We've been reading about it. We're not very familiar with it in India. But how do you see this new world of digital assets, and how do you think the role of a custodian will change? It may not be happening in India today, but I'm sure a decade from now, all that will be if we discuss this 10 years from now, I'm sure we'll be discussing that rather than, the traditional assets that we were talking about.
Oh, it's a very good point. 10 years from now, definitely.
Right.
If you look at it 4 or 5 years ago, the way people were clamoring around digital asset custody,
right.
One would have thought by now you should have seen a lot more of that.
Right.
But unfortunately, I think, at that time, when you said digital asset custody, it was largely crypto asset custody in that sense. And probably a few things that happened in the crypto space led to slowing down that thing, and we are where we are now. But in the meanwhile, conventional assets, not crypto assets, but conventional assets, which is like equity, fixed income, whatever, tokenizing those funds, those investments, and having a downstream setup in the asset management value chain, which is all embedded with this tokenized environment, I think is already been now started by a few fund houses. The preliminary feedback, the experience of having done this, some of them are over a year now, or I think over 2 years, is positive. Because then you can put that for better use when it comes to collateral and other things and all that stuff. So if this picks up space, and this has been my personal view, I think this will start having wheels which will make it run faster than the crypto asset custody. Because this one, at least the underlying risk is the same old equity and fixed income that the industry and investors are very familiar with. It is not an unknown crypto risk that that is evolving, right? But you're just saying I'm using a new digital technology which will make this a better process, etc. The question is, this is all coming at a cost. Now, industry sees compression, so will this justify the investments that we need to make? Do we see benefits which will help distribution of the fund, the investors and the intermediaries like all of us in the chain? And eventually, if the decision is the investment is worth it, we can expect to see a huge number of fund houses and funds getting into this bandwagon. At this juncture, it is more a let's evaluate, let's experience it, let's see what the benefits unfold before we take the big plunge. And therefore, only those who are okay with investing to do this have done this, not the entire industry. But this one, my personal bet would be not 10 years, it will run at much faster pace.
So tokenization of conventional assets will happen at a much faster pace, and with it, it will bring a lot of benefits. I think that's what I hear you saying, including accessibility, including instantaneous transaction, including higher levels of security. And custodians will have to reorient themselves to build out solutions for these kind of tokenized assets.
Correct. And we have already started that. I mean, most of them have already started work on this. There are multiple things which have been set up earlier as a sandbox, and in a lot of cases, we have actually gone live as well. It's no longer a proof of concept discussion. It's live, but you are trying to experience it live to see what else you can get, etc., etc. But I think in a couple of years, once people start to get more and more experience with it and see the benefits, it will kind of create a cycle where others will follow suit and others will follow suit, and by the time 50% of the industry is adopting that, it will then become a norm soon. Still a few years from there, but that is what I would think is
wonderful. This was a fascinating discussion, Anand. Thank you so much for your time, and maybe we will catch up a couple of years down the line and then talk about how you become a digital asset custodian.
Absolutely, my pleasure, and I also really enjoyed the conversation. Thank you so much, Sashi.